We are starting a new month, and if you trade major pairs, the market is in a very important liquidity regions. If the market reacts from it, then we're likely to get high probability ICT setups for the month. However, if it gets invalidated, we might be forced to actually change our bias. So that is what you're going to look at in this weekly forecast video. So we're going to start our analysis. We're looking at dollar index, and because it's a new month, we'll have to start our analysis from the monthly time frame. And if you look at the monthly time frame for dollar, so far this is the kind of price action we have. So if you've been following me for some time, you know very well that we have been anticipating for a bullish dollar, and our draw of liquidity for price is these highs here. So if you look at the dollar, let's look at it. You can see clearly most of last year we had all this bearish momentum, consolidation, and so far this is where price is. So this is what we would look at and say price has created a new dealing range, and that is the high of the range, and this right here is the low of the new dealing range. So at this point for dollar, this market is considered really discount or cheap. So if you want to continue selling because dollar is bearish, it would be nice to wait for price to retrace to a premium key level before you finally sell, because you don't want to continue selling down here. So as a wise trader, it's better to do that, and that is exactly why at this point we are anticipating that this market is likely to retrace to this fair value gap here on the monthly time frame. You can see there's a fair value gap and there's an inversion fair value gap. You can see it's at 50% of the dealing range, so which means it's actually a premium PDRA. So for us to get that high probability sell or continue selling dollar, this is what I would love to see. I would love to see price actually get here before we continue selling. So let's see what exactly did last month price do. You can clearly see the last month of April. You can see we have this volume imbalance here, which actually price tagged on the monthly time frame. So that's good. Price tagged that volume imbalance. So then this volume imbalance should be used or should act as support and be used to push price higher. So let's look at the weekly time frame. Again, I've said because our draw of liquidity is this buy side liquidity and the balanced price range, that is our draw of liquidity for price. We just cannot go to the market and start buying. We need all time frames to start aligning bullish in order for us now to participate in that bullish momentum. And so far, if you look at the weekly time frame, you can clearly see when we were having all that consolidation, this is what it looked like on the weekly time frame, swept all this liquidity, then we've had all this bullish momentum. So on the weekly time frame, again, we can say that at this point here, price has formed a new dealing range. You can clearly see if you wanted to continue buying, because you can see clearly we had all this bullish momentum, the best place to continue buying from is if price actually retraces and you buy from a discount. And this is I actually forecasted all this bearish momentum to this weekly fair value gap. So this weekly fair value gap is actually the level that I'm talking about. So this weekly fair value gap, you can see which the monthly volume imbalance is right here, is very important. So this is what it's going to be used either to confirm our bullish momentum. If it gets invalidated, then at that point, we might have to review our analysis. Now, for those people who want to sell, it's another thing. For those people who want, for the sellers now, for the sellers, they'll be looking at this weekly fair value gap, which means for us buyers, the day this weekly fair value gap gets inverted, then at that point, we are sure without a doubt that this market should continue going higher. At this point, the market will have no reason at all to sell. Before we proceed, if you like how I break down the market from the higher time frame to the lower time frame and you want to learn the system behind it, you can join my trading bootcamp. I'll put a link in the description box below. It's actually best for someone who is struggling with ICT SMC and they want to figure out a way they can put all the concepts together, create a repeatable trading system that they can apply it every single week. So now let's look at the daily time frame. Now on the daily time frame, again, you can see this is what we have so far. Remember, if you want to buy, we need all time frame to start aligning bullish. And clearly you can see, so last week we actually forecast this bullish momentum that but you got that bullish momentum between Tuesday and Wednesday. Then Thursday, there was a lot of news that actually led to all this bearish move here. But you can clearly see price has still not yet violated the weekly fair value gap. So as long as price has not violated this weekly fair value gap, my bias for dollar remains bullish. And right now, if you look at this price action, you can clearly see we had all this bearish momentum here. So price has actually formed a bearish order block right there. And we also have a bearish fair value gap here. So people who will be selling, you can be sure most sellers will be watching this level, and this is the level that they would want to use to sell. But for us, because we are buying, if anything, we actually want to see price invalidate this level. So what I want to see this week, I will need to see price actually invert this. Once price inverts this fair value gap and you get now an inversion, a bullish inversion fair value gap, I will use that as my high probability PDRE that should be used to push price higher. So let's look at USDCHF. So USDCHF and dollar index are positively correlated because we've already done the deeper analysis for dollar index. So USDCHF, we will just start our analysis from the weekly time frame. So it's the same thing because we want to see a bullish dollar. We also want to see a bullish USDCHF. Now, for USDCHF on the weekly time frame, you can clearly see again we had a new dealing range. Price created a new higher high. Then we've had a retracement too. You can see this volume imbalance right here, and apart from that, all this is an inversion fair value gap from this high all the way to these lows here. All that is an inversion fair value gap. So, and you can clearly see price actually has tagged it now 3 weeks and it has not yet been violated. As long as dollar is still respecting the weekly fair value gap, I'm watching this. This should be used to actually support bullish price action. So let's look at the daily time frame. Now, if you look at the daily time frame again, because you want to see a bullish USDCHF, we need to see all time frames aligning bullish. So for USDCHF to align bullish, we have this bearish fair value gap here that was created by price. So for those people who are selling, you can be sure this is what they'll be watching, this bearish fair value gap. But because we are buying, we want to see a bullish one, then we would want to see price actually invert this. Then the inversion fair value gap becomes our high probability PDRE that should be used to push price higher. So next, let's look at EURUSD, and EURUSD and dollar are negatively correlated. So that means if you want to see a bullish dollar, then you want to see a bearish euro. And you can also clearly see that happened last year. You could clearly see most of last year we had a bearish dollar. And here, if you look at the monthly time frame EURUSD, you can see we had what? A bullish EURUSD. Now, bullish and then this consolidation. And again, it's still the same thing, but now the opposite. You can clearly see price has formed a new dealing range. It has formed a higher high. And at this point, you can consider this market really expensive or at a premium. So if you want to continue buying, the best place to buy from is where? Is from a discount. That is your best buying position. So if you get this Fibonacci from this low to this high, you can clearly see 50% of this dealing range. If we were to use this, 50% of the dealing range is actually where we have this order block right here. So for us to continue buying EURUSD, it would be nice if we get a retracement to a discount PDRE before we see that bullish momentum. So if that is the case, then that means definitely our draw of liquidity as of now is where? To this internal range liquidity. So let's look at the weekly time frame. If you look at the weekly time frame, you can clearly see again EURUSD when we had all this consolidation, this is what we had. And then finally we got this bearish momentum. And you can see here, this is market structure shift. And at this point, you can see again, price has created a new dealing range between that high and this low. So this is what we had. So we've had this bearish momentum. So because we want to see bearish move, because remember our draw of liquidity is the internal range liquidity. So all this bullish move that you see here, I consider it a retracement. A retracement to this to the premium of this new dealing range before we continue going lower. And for those who've been following me for some time, you know very well we called all this bullish price action here. We forecasted it right here with you guys. So you can see there's this weekly fair value gap, which was our draw of liquidity until price finally has gotten to it. This is the important level that I'm talking about for major pairs. So this is the level that determines if our bias of bearish EURUSD is solid or not. So you can clearly see as we were having all this bullish move here, price actually left behind a bullish fair value gap, which is right here. So you can be sure people who are buying, they will be watching this bullish fair value gap. But because we are selling, it means the day this bullish fair value gap gets inverted, then at that point, without a doubt, that is enough confirmation that this market is now really lining up and it's ready to continue with that bearish momentum. So let's look at the daily time frame. On the daily time frame, so far this is what we have. We had all this bearish momentum. Last week we looked at this inversion fair value gap, which you can clearly see price targeted on Monday, gave us this bearish momentum, and the price is back to it. But I like how price has actually not reclaimed this inversion fair value gap. You can see price wicked through it, took all this liquidity, but still closed below it. Now, so going forward next week, again, I want to see bearish momentum. So let's look at GBPUSD. So GBPUSD and EURUSD are positively correlated, and it's negatively correlated with the dollar index. So I don't need to do really breakdown from the monthly time frame. We're just going to look at the weekly time frame. So if you look at the weekly time frame, again, it's the same thing as EURUSD. We have market structure shift created here by price. So price created a new dealing range, and we have been calling this bullish move, and this inversion fair value gap, also this weekly fair value gap, has been the draw of liquidity for price. We forecasted all this bullish momentum until finally you can see price has gotten to this point here. So this is an important level for GBPUSD. We do not want to see price invert or reclaim this inversion fair value gap. We want price to use this inversion fair value gap to push price lower. So let's look at the daily time frame. If you look at the daily time frame, you can clearly see GBPUSD. We had all this Thursday, we had really all this bullish move, price clearing these highs here, and also clearing these highs, and also these highs here. Well, EURUSD did not really do that. So that means you already have SMT between EURUSD and GBPUSD. So this is the high of 17th February. We take out Feb highs, but EURUSD price does not do that. And remember, SMT is another confluence that we look for anytime we want to see a reversal. Now, price formed a bullish fair value gap right here. So people who are buying, they will be watching this. But for us, because we are selling, we also watch this. But instead, we want to see price actually invert it. Then it should be used to push price lower. So let's look at gold. And gold, we're going to start our forecast from the weekly time frame. We don't need to go all the way to the monthly time frame. So now, if you look at gold on the weekly time frame, this weekly fair value gap, again, we've been watching, very important. And I told you guys, high probability, as long as price does not invert this weekly fair value gap, we're looking at a bearish gold. And you can see so far, price has done that for 2 weeks. For 2 weeks, we've had that bearish momentum. So let's look at the daily time frame. Of course, the weekly fair value gap is right here, and this is the weekly order block where we have the weekly fair value gap inside. On the daily time frame, you can see we had this daily fair value gap, which got tagged by price, and we've had all this bearish momentum ever since. Now, so for where price is, we want to see more bearish momentum. On the daily time frame, you can see you have this daily fair value gap and this order block, but this order block already got tagged by price. So we have this daily fair value gap. So this daily fair value gap is an important level I'm watching. I really want to see price use it to push price lower if gold is still bearish. So let's look at NAS 100. You can clearly see NAS 100 from the weekly time frame. We've had all this bullish momentum, and price has created a new dealing range. But NAS 100 now, it's again at a new all-time highs, and I'm sure you notice most of the time when NAS 100 it's at new all-time highs, and it's really giving us that bullish momentum. We cannot really ask for that deep retracement. But so far on the weekly time frame, you can see we have this fair value gap left behind by price. We have this fair value gap left behind by price. And again, price has created a new fair value gap right here. So all these are important levels that we watch for price. So for me, it would really be nice if we actually see a retracement, even if price retraces to this fair value gap before we continue with the bullish momentum. So let's look at the daily time frame. You can clearly see price left behind this daily fair value gap and this order block right here. So far, so two things are likely to happen. Either price will use this and you see that more bullish momentum, or price inverts all this. If price inverts this fair value gap, and you also end up inverting this order block right here, then this is a high probability level that the market is likely to give us that bearish momentum. And if you're getting that bearish momentum, of course, your first draw of liquidity is this weekly fair value gap right here. So that is all I prepared for this weekly outlook video. If you enjoyed this video, don't forget to give it a thumbs up. If you have not subscribed to this channel, kindly hit that subscribe button. I'll see you in the next one.